Hello, everyone. Welcome to the market opening bell for Friday, July 12th, your 10-minute guide to the stock market. Hong Kong stocks rebounded on Thursday. The Hang Seng Index opened 26 points lower, briefly dipped 71 points to a low of 23,820, then reversed to gain as much as 195 points, reaching a high of 24,087. It closed up 136 points or 0.6% at 24,028. The A-share index rose 70 points or 0.8% to 8,668, while the Hang Seng Tech Index fell 15 points or 0.3% to 5,216. Total market turnover was 246.7 billion Hong Kong dollars. Southbound trading turnover reached 150.1 billion dollars, with southbound net inflows of $2.902 billion, down nearly 69% from $9.256 billion the previous day. Net buys included China Construction Bank totaling 587 million, Alibaba 572 million, Meituan 485 million, and the DL Holdings 355 million. Net sales included Tencent totaling 729 million, Xiaomi 378 million, and Sunac China 141 million. Southbound funds have net bought SMIC for 15 consecutive days, totaling 9.425 billion Hong Kong dollars. China Construction Bank for 6 days, totaling 2.343 billion. Meituan for 4 days, totaling 3.416 billion, and Alibaba for 4 days, totaling 3.282 billion. Technically, the Hang Seng Index reclaimed the 24,000 level in the 20-day moving average, but has not yet surpassed the 10-day moving average, currently near 24,085. Mainland Chinese markets rose significantly. The Shanghai Composite Index reclaimed 3,500, peaking at 3,526 and closing at 3,509, up 16 points or 0.5%. The Shenzhen Component Index hit 10,667 and closed at 10,631, up 50 points or 0.5%. Combined turnover in Shanghai and Shenzhen was 1.494 trillion yuan, up 40.1 billion yuan from the previous day. The renminbi central parity rate ended 2 days of declines, set at 7.151 against the US dollar, up 31 pips. Express delivery stocks surged collectively. On the news front, the party leadership group of the State Post Bureau announced a recent meeting to strengthen industry regulation, improve market rules for the postal and express delivery sector, firmly oppose involution-style competition, and address end-to-end service quality issues in accordance with laws. ZTO Express surged 7.4% to 148.8 Hong Kong dollars, becoming the top performing blue chip stock. JD Global Express rose 7.6% and JD Logistics gained nearly 3%. Statistics show that as of July 9th, China's express delivery volume in 2025 exceeded 100 billion parcels, 35 days earlier than in 2024. The industry has surpassed 100 billion parcels for 5 consecutive years. However, intense competition has sustained the price war issue, impacting service quality. From January to May 2025, the average express delivery price was 7.5 yuan, down 8.2% year-on-year. In Q1, the average price was 7.7 yuan, down 8.8% from April to May, it was 7.3 yuan, down 7.3%, with a decline slightly narrowing. Due to intensified price competition in 2025, price drops have widened compared to 2024. Even SF Express, which focuses on the premium segment, saw its 2024 per parcel revenue fall 3.4% to 15.52 yuan. Amid escalating price wars, despite some cost optimizations, major companies face significant pressure on per parcel profitability. Multiple companies issue profit alerts. Wuxi AppTec expects net profit attributable to shareholders for the 6 months ending June to reach 8.561 billion yuan, up 101.9% year-on-year, including investment gains from selling stakes in associates. Excluding non-recurring gains and losses, net profit is about 5.582 billion yuan, up 26.5%. Adjusted net profit is approximately 6.315 billion yuan, up 44.4%. In the first half, the company focused on its unique integrated end-to-end CRDMO model, capitalizing on steady client demand to drive robust business growth. Revenue is expected to reach about 20.799 billion yuan, up 20.6%. Q Technology expects comprehensive profit for the 6 months ending June to grow 150% to 180% from 115 million yuan in 2024. This is due to continued upgrades in smartphone camera module specifications, increasing the sales proportion of mid to high-end products. Sales of camera modules for automotive and IoT applications grew about 47.9%, driving steady revenue growth and improving gross margins. Fingerprint recognition module sales and product mix improvements led to significant revenue growth and better gross margins. Additionally, associate Xinju Technology's operational performance improved. Time Interconnect Technology expects net profit for the 6 months ending June 30 to grow 50 to 60% year-on-year, mainly due to increased sales orders for data center products in the wire harness segment, boosting group revenue. US stocks rose with fluctuations. The Dow closed up 192 points at 44,650. The S&P 500 hit 6,290, closing up 0.3% at 6,280, setting intraday and closing highs. The Nasdaq reached 20,655, closing up 0.1% at 20,630, also hitting intraday and closing records. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, rose 66 points or 0.9% to 7,468. Tesla surged 5% to $309.87. CEO Elon Musk announced plans to expand its autonomous taxi program in Austin, Texas, this week to cover a larger surface area. He also said the company is seeking regulatory approval to offer services in the San Francisco Bay Area, with the potential launch in 1 or 2 months. Tesla's autonomous taxis currently have an employee in the front seat to intervene in safety concerns. Musk is shifting Tesla's focus to autonomous vehicles, AI, and humanoid robots as its traditional auto business faces challenges. Nvidia rose 0.7% to $164.1, with its market cap exceeding $4 trillion at close for the first time. Reports indicate Nvidia CEO Jensen Huang met with US President Trump at the White House on Thursday, though details are unknown. Earlier reports suggested Huang plans to visit China to sell new AI chips, but seeks US confirmation that such sales comply with regulations. Benefiting from Nvidia's potential re-entry into the Chinese market, AMD surged 4.2% to $144.16. Delta Airlines issued an optimistic revenue forecast, sending its stock up 12%. Other airline stocks also soared. United Airlines rose 14.3%. American Airlines climbed 12.7%, and Southwest Airlines gained 8.05%. US initial jobless claims for the first week of July fell by 5,000 to 227,000, below market expectations of 235,000. This marks the fourth consecutive decline, reaching its 7-week low, reinforcing views of a relatively robust U.S. labor market amid high interest rates and economic uncertainty. Our stock pick today is Crystal International, stock code 2232. Crystal International primarily engages in the development and manufacturing of apparel products, including casual wear, denim, intimate apparel, sweaters, sportswear, and outerwear. The group has strengthened partnerships with leading clients and sportswear brands by increasing market share in existing product lines and successfully developing new categories, driving stable revenue growth. Additionally, Crystal has secured certifications for various upstream fabrics from brand clients, leveraging vertical integration to meet broader production needs and solidify long-term client relationships. For the year ending December 31st, 2024, the group achieved a revenue of $2.47 billion, up 13% from 2023, and a net profit of $201 million, up 22%. This was driven by continued investment in automation and effective management, addressing initial inefficiencies from onboarding numerous new employees, optimizing production efficiency, and boosting the gross margin by 0.5 percentage points to 19.7%. The net profit margin rose to 8.1%, up 0.6 points from 2023. Total dividends for 2024 were 0.383 Hong Kong dollars per share, including a special dividend of 0.055 Hong Kong dollars to mark the group's 55th anniversary, a 113% increase from 2023. Excluding the special dividend, the current dividend yield is 6%. The group indicated that based on projected cash flows, there's room for further dividend increases. By the end of 2024, most core brand clients had optimized inventory levels, eliminating the need for further destocking. Rising consumer demand for trendy and innovative products prompted additional orders from brand clients, further boosting apparel production demand. Looking to 2025, Crystal will focus on sportswear, casual wear, and intimate apparel, deepening ties with key clients. Mid-2024 capacity expansion added 10,000 employees, bringing the total to 75,000, ensuring sufficient capacity for growing orders. The group's key production facilities in Vietnam, including a new self-built fabric plant in northern Vietnam that began construction in late 2024, will benefit from the recent US-Vietnam tariff agreement. 20% tariffs on Vietnamese exports to the US. Recommended buy price 5.35 Hong Kong dollars. Target price $5.85. Stop loss $5.1. I do not hold the aforementioned stock.